Good morning. Welcome to the Down and Dirty and 30 Mortgage Pros 411. My co-host Kevin Casey. I'm Audrey Boissonou, and we are so happy to have Terri Buckman here with us today for our first of these little presentations. So just for the record, it will be posted on YouTube later, and you'll be able to watch it there. She has some great slides. So welcome, Terri. Thank you so much for being our first one out and our little guinea pig. We appreciate you so much.
No problem. Can you actually see the slide deck?
Yep,
Yes,
totally
yeah.
can.
Cool. Well, I'm happy to be here. I'm really excited to be your first guest on the Down and Dirty and 30. It's a lot of fun. I did want to start by saying we're going to definitely talk about how we can shift perspectives on that hesitant buyer that's on the fence. They think, properties are going to drop. There'll be foreclosures all over, whatever is going on in their mind that's creating hesitation. And we're going to look at some strategies to overcome interest rate sticker shock using temporary buy downs, as well as these perspective shifting solutions we're going to give you. But I wanted to say at one point we'll be looking at some interest rates, and this PowerPoint, this conversation, this whole thing is for training purposes for real estate professionals only. This is not intended for the consumer. Okay, real estate professionals only. So I did need to make that clear. All right, perspectives. We got a lot of people on the fence. They're afraid to make a move, right? They're, I think a lot of them have had their parents deal with some difficulties back in 2008 and during the big meltdown, or they've gone through it themselves. And so they're taking a wait and see, right?
Yes.
Some of it's interest rate sticker shock, and some of it is just perception that maybe values are going to come down.
We had someone on recently who was talking about how the data from MLS is showing there are more buyers on the fence right now, more searches on MLS than ever before. And so there is a lot of pent up demand and people who are waiting either for that crash or for interest rates to come down. And so now that we're down almost a point, or a point in the last month, it's time to start having those conversations, I would say.
I think it bodes well for this spring, doesn't it? Yeah,
it really does.
Down already. All right, okay, talking points. A lot of gibberish on this slide here, but let's talk it through. Is this 2008 all over again? Are we going to have another huge correction of property values, foreclosures all over the place? For those of you who weren't in the business or possibly even adults in 2008, I want to make some talking points between then and now. So 2008 and the big crash, you may not remember this, but the PMI companies, the private mortgage insurance companies, all stopped insuring 100%. So right out the gate, almost overnight, they withdrew and we needed 20% down on a transaction. It was crazy. Okay, not a problem now. We've got PMI all the way to 97%. All the private investors, including all jumbo, stopped lending immediately. Of course, the funny money, that dried up first. Those lenders crashed immediately. But then it took down all the other jumbo investors as well. And we were left with just FHA loans, which at that time, the limit was 200,000, 160, 362, 790. And already that was way too low for California properties, right?
Right.
And today we've got, thank God, because of HERA, we've got FHA loan limits pretty soon over $1 million. That's of January 1 with case numbers. The conventional loan limit back then was 417,000. Do you remember, people don't realize, we didn't even have high BAL loan. There was no such thing as high BAL.
Yeah.
All we had overnight, we had Fannie Freddie to 417,000. Okay. So
and we were thankful for that because they didn't lower the limit. That was the first time they did.
But you know what I remember when we went overnight from the SISAs and the Ninas and all the funny money to boom, all of a sudden now all we have is 417 Fannie Freddie. Yeah. Nobody knew how to document income on a loan, except for you and me. We knew.
Right.
I remember we had a rep come in our office that time, and he goes, "Well, I have conforming loans, and I have conforming loans, and if that doesn't work for you, I have conforming loans."
Exactly. That was it. That's all we had.
That was it. That's all you had.
And nobody knew how to document income.
Because that 417 didn't change again for what was it, Kevin? 11 years?
11 years.
11 years. Well, our loan limit stayed the same.
For the standard. What
Yes.
did happen in 2008 was the HERA Act, Home Economic Recovery Act
Yes.
of 2008. And that's where we got Highbow riding to the rescue. And thank God we also got the FHA loan limits increased. So
Yes.
we now have high LTV loans over $1 million very
Yeah.
soon here.
Crazy.
So liquidity is great. We don't, high LTV loans are plentiful. It's a big difference from then. And then also back then we had, inventory all over the place. Remember those huge subdivisions everywhere,
Yes.
empty, ghost towns, because the builders had got over exuberant in the buildup, right? Well, this
Yes.
time the builders took a wait and see. They got smart. They learned their lesson. They stopped building. And so we don't have inventory all over the place. Matter of fact, new household starts are outpacing, new household formations are outpacing housing starts. So we have more people, more families being created that need housing than we're actually starting to build homes for.
And in
That bodes well for
2007
values, right?
in 2007, I believe that the inventory levels were at about 4 million units available, and the population was much lower than now. And now we have 1.2 million available with a higher population. So it is vastly different between then and now. And so when people are talking about, oh, there's so much inventory, there's not enough inventory, there's really not enough inventory. Like it is so below where it should be. So
Absolutely. So that supply demand, good for property
Yep.
values, correct?
absolutely.
And then we also had we made all those toxic mortgages at the height of the values, high LTV borrowers that we didn't even qualify them or document their income at the start rate, nothing. Exploding loans with exploding features, toxic features, they were unsustainable. So before you knew it, keys were being mailed in. We had the bail and buy, remember that?
Yes.
You mailed in the keys on this house, you went down the street and bought the same house for 200,000 less.
Yep.
Until the agencies,
Figured it out. Yep.
figured it out. We got
Terrible.
some guidelines on that. That's not the case this time. Americans have more equity in their homes now than they've ever had. And it's all sustainable 30-year fixed mortgages, and they're all QM. We qualified everybody, right?
Yep.
So you're not going to have keys getting mailed in. Not to say we might not skid into a recession, and there will be, maybe some difficulties, but it is not the same situation as 2008 at
But
all.
again, when you're talking about recessions historically, unless we cause it, which housing caused the
Yeah.
2008 recession,
Housing
does well during recession. So even if we are headed into a recession and, the jury is out on that, it is still not a bad thing for housing necessarily. It's terrible for the people whose lives are impacted, who might lose their jobs, et cetera. There's no doubt, but it is not bad for housing.
Well, it puts a lot of downward pressure on interest rates, of
It
course.
does. It does.
Yeah. We also had high unemployment back then at 12.5%, and I think it just ticked up from 3.5 to 3.7 now. So, we're pretty fully employed. And do you remember when all the banks froze the HELOCs? Not only did all the, jumbo money.
reason that they called in some and
I have a funny story. I still have clients that thank me for, I had a little blog at the time. I sent a note out, it was Knowledge on Loan, saying, if you think you're going to need your HELOC anytime soon, you might want to pull it. And that's because I had a big HELOC on my house and I was wondering how the hell I was going to get through the crash. The company I work for imploded.
Right.
So I was reading the fine print on the HELOC, and sure enough, there was fine print that if any material changes, property values change, your income situation changes, they could freeze the line. And that is still in most HELOCs today. So, and they did freeze them. Sure enough, we had never seen it before.
Yeah, a lot of contractors got caught with that. They're using their HELOCs to build homes, and then the next thing their HELOC got frozen. They had no way of continuing the construction. They had no way of finishing the project, and therefore they went bankrupt.
And while we're talking about it, private money reverse mortgages have that same clause, most of them. So if you are working on a line on a privately held reverse, just heads up on that same clause.
Wow. I didn't know that.
Yeah.
I have been cautioning my clients though, who talk about, they're like, oh, I just get a HELOC. I'm like, if you are going to need that money, you're going to need that money, withdraw it. Yeah, you're going to pay interest on it, but at least you're going to know it's there. Otherwise,
well, first of all, get your HELOC when you don't need it.
Yes.
Secondly, if anything weird happens, pull the money out.
Yep.
Take the money on your line. Okay, we go to
Yep.
war, God forbid, something like that.
Yep.
But we're not going to see, I don't think we're going to see what happened back then this time. People are
don't
still
either.
making HELOCs to 89.9, right? All over town.
Now, keep in mind, our title is Down and Dirty in 30, and we're 12 minutes into this.
All right, so buy downs. I'm going to assume everybody knows how a buy down works. A permanent buy down, you're just paying points to get the rate down, high points up, rate down. Temporary, you're putting money in a subsidy account so that you can subsidize payments short term for the buyer.
And wait, hang on, go back to that just for a second, because there is who can pay for what? That's the question on these, is the seller has to pay for certain, talk us through that just briefly.
Okay, so I'm going to speak only on behalf of PacRes Wholesale. We only allow seller paid temporary buy downs. There are lenders, I believe, out there who will allow the buyer to pay it. Although if it were my buyer, I would say, if you've got the money to subsidize your own payment, put it in, control it yourself and put it in a set aside account. Why would you have the lender hold on to that?
Right. Yeah.
Right.
Exactly.
So I don't know why a buyer would pay it, but I think you can also, there are some lenders who might allow other interested parties, perhaps realtors, to chip in on that. However, we don't at PacRes. And there's just different takes on compliance standpoints, from points and fees and things. That's why you're going to see, different treatment on that.
Just for a second, can we talk about PacRes Wholesale? Because you said a few things to me that I thought were really interesting and great. So the first one was that it was, it is a real hands-on old school lender, but not in the sense, I mean, you have technology, you have all that, but you have a group of people who are very seasoned in the mortgage industry, who are very touchy-feely on the transactions, right? Like if you need to talk to
100%.
someone, you can talk to someone. Tell us a little bit about PacRes and what makes it unique. And
so our client is really that Main Street mortgage broker that's been there forever, that's servicing their, taking care of their community. They've got their database. They want to know their team that they're working with, just like you do when you go in-house with your loans. You know the underwriting manager and all that good stuff. So we're just a super seasoned crew that really want to do hands-on taking care of our clients and making sure they know everybody. More like, lending a few years back, where you could maybe even walk down the street and hand walk your loan in. We don't do that anymore, of course, we're paperless, but we have a very simple process with as far as technology goes. And main thing is you're going to know everybody. You're going to know your closer, your funder, your underwriting, the underwriting manager, the closing manager, and we're going to take good care of you. So yeah, thanks.
That's a beautiful thing. And uploading your conditions, you don't have to put everything in 16 buckets. You guys do that for us.
You just drop it in the Dropbox and we'll parse it all out for you. We make it super user friendly for you.
Hallelujah.
Hallelujah. Yeah.
All right, so back to 2-1 buy down, 3-1 buy down. So
yeah, we offer all three, a 1-0, 2-1 and a 3-2-1. And we have no LLPA. I want to say that there's no LLPA for doing a temporary buy down with PacRes Wholesale, and most lenders are going to charge you an additional quarter to do the temporary buy down. So your buyer is going to get the exact same note rate on a buy down as they would on a 30-year fixed.
so good to know.
Wow, that's interesting.
Yeah,
I did not.
It's a biggie.
That's great. Yeah, that's awesome.
Yeah. So we'll just look at one example here since we're running out of time. But this is a good talking point when you're talking to your clients about why they might want to go ahead and make an offer now and not wait, and how this is better than last year, 2021. So Freddie Mac said that the average interest rate all that year was 3% on a 30-year fixed. Okay, that rate's long gone. We're really looking more at a 6.375 on a 30-year fixed for comparable pricing today, right? But there are some other factors going on. It was a way overheated market. You probably remember buyers could not prevail. They had to, there was multiple offers. They were coming through the open houses frantic. When's the deadline for offers? And, what's going on? How many are in? They were waiving inspections. Are you kidding me? There was no due diligence. It was just panic. And they were often paying at least 10% over for the prevailing offer. So now we have a cooler market. It's not necessarily a buyer's market. It's more equilibrium, buyers and sellers. So buyers can get their inspections done. They can look at multiple houses without panicking. They can make an offer, at asking price or even a little bit below asking price, and they can certainly ask for concessions. You couldn't get concessions in 2021. You certainly couldn't do a contingent offer, right?
Right.
So
absolutely.
these make terms for your buyer attractive, and a lot of these terms will offset a slightly higher interest rate. So if we look, for example, let's take a $750,000 purchase price. In 2021, the prevailing offer might have been $825,000, possibly even more. No concessions. Inspections were waived. Buyer did get a 3% 30-year fix. That was the bright spot, right? But now we have probably the buyer could come in at 740 and still get seller concession. They're going to ask in this case for a 2-1 buy down, and they're going to ask the seller to pay the $13,389 to pay to subsidize their payments for 2 years. They can get their inspections and repairs, and maybe they can even go contingent. So these are much better terms. They can make a more sane, rational decision while they're shopping. And when we look at it, because they can get a better price and a lower loan amount, so they're going to have more equity right out the gate, right, than they would have when they bought in 2021. They're going to have lower property taxes. They do have a slightly higher P&I, as you can see, because on the 2-1 buy down, we're going to have a 4.375 start rate compared to a 3%. But at the end of the day, because they're saving here on property taxes and insurance, payment's only higher by $60.
Wow.
Okay. And it gets even more compelling. Oh, I do want to show this. For anybody who wants this, this is our temporary buy down calculator. You plug in your loan amount, your note rate, and it's going to give you the breakdown on the payments. Gives you the cost that you can share with your buyer. This is the concession they'll want to ask for. Talk to your listing agents. This is what you might want to prep a seller to be willing to offer so that they can advertise their property with a rate of 4.375. See that? Yep. This will calc it all out for you. And it also shows you the savings year by year. And here it gives you the percentage of the loan amount. This percentage is important because your buy down is counted in your interested party contributions, which are different at different loan LTVs, right? So you do want to know what that is as far as a percentage goes.
And where do they find the calculator?
I can email it to anybody.
On a website?
They find it?
It is on. No, it's not on our external website. So it is if you're approved, you can log in and get it. So I'll get my contact information out there and we'll let people get a hold of it.
Great.
Or any PACRES account executive for that matter. I'm not the only one.
Now, the one downside that we have to touch on in the 2-1 buy down or 3-1-2 is you can't qualify at the lower payment plan.
That's correct. But because we don't have an LLPA, it's not going to make it harder to qualify for. It's going to be the same as if you were qualifying for a 30-year fix. So if qualifying is your issue, you got to go permanent buy down. You got to permanently buy that rate down until your ratios work. If it's more of a sales concession, overcoming interest rate sticker shock, the temporary buy down is awesome because we all pretty much think MBS Highway, Dave Stevens, and MBA themselves are all predicting rates coming down next year. 5 seems to be the number everybody's talking about, into the 5s. So why, if you didn't have to do a permanent, maybe you want to set that money in a subsidy account because there's a cool feature about that. This is a 3-2-1. The 3-2-1, look at that. The payment is actually lower if they bought today versus 2021. Wow. So that would have moved fast here. Same thing, buy down calculator, you hit this toggle, whoops, and it will show you a 3-2-1. And you can see that you're going to start at 3.375. But there is, now this costs more, obviously, to do the.
Yeah, that costs quite a bit more.
Yeah, quite a bit more, but still, it's better than dropping your sales price by 50,000.
Well, I have not seen a hard time getting sellers to pay credits. 2% to 3% is pretty.
Right. It's
pretty easy.
Almost every transaction we have coming in right now is showing seller concessions.
Okay.
For the most
and
part.
to the person who asked if this presentation is going to be posted, it is recorded and it will be posted. Probably we're going to find a place on our website, but also on the YouTube channel, Mortgage Pros 411. So you will be able to reference it and share it with your realtors, etc.
As well as this buy down calculator. Look at the both of them posted for distribution.
Yep.
All right. Permanent buy down, because the rate is if you did a 13,000 seller concession for a permanent buy down, that's going to get your rate about 5.5. And you can see here the payment is $465, higher than it would have been last year. So not as compelling as using the temporary buy downs. And if rates come down and you refinance them, all that money the seller paid up, that 13,000, evaporates.
Yeah.
Right, right. Doesn't
So
make
here,
a lot of sense.
here's just a quick, know that your interested party contributions are limited at 3 on a 90. So you can't really do a 3-2-1 on a 95 conventional. You can on a Govy because you can do higher IPCs on FHA. But no, you can go all the way up to 6% once you're at 90% or less. So plenty of room to do a seller concession for buy down.
IPC, what's an IPC?
Interested party contribution.
Ah, thank you.
No problem. No extra charge for MI to do a temporary buy down. Your MIs are going to run exactly the same as the 30-year fixed. Now here, this is an important point. This is a point that many people miss. Now, we looked at the buy down calculator, and that buy down money gets set aside in a subsidy account. The loan servicer takes whatever extra money is needed to make the difference between the payment of 4 3/8 and 6 3/8. They take that out each month out of the subsidy account to make up the difference in the payment, right? That money remains the buyer's money.
Yes.
Okay, that sits in that subsidy account. If they refinance next year, which they probably will, right? When the rates come down and you put their permanent financing in place, they get to take this credit in this account as a principal reduction, which will offset the cost of their refi.
Yep.
Hallelujah. Okay, so it doesn't evaporate if they go to refi next year, which they most likely will. No guarantee, but everything's pointing that direction. They will be able to use this to offset the cost of the refi. Love that. And you can see that even after a full year, there's still quite a bit left in the account, even if they didn't do anything till 2024 or 2025. So important point of the buy down.
It's great.
Big selling point.
Even in the third year, it basically pays all the interest that it would have accrued.
Yeah.
So
Absolutely. And so we were talking earlier about this is the time for originators to be out there with the referral partners, both the buyer's agents and the listing agents.
Yes.
And what's nice about this program and this whole concept is you can be having this conversation with all of your listing agents and all of your agents on their listings. It would be really wise for them to understand how this buy down works so that they can overcome interest rate sticker shock and get buyers off the fence and advertise a specific amount of money for a buy down so that they can advertise their home with a start rate of 3 3/8 versus 6 3/8. Okay, but you prep the seller ahead of time. And whether the seller does this or not, this is the conversation you want to be having, that conversation with that agent. And for your buyers, you also want to talk to them about, you know what, we should be asking for a concession for a buy down, and talk them through why this is a good strategy for 2022 and into early 2023. And that is really the bulk of what I wanted to talk about today. I hope we have given you some good ideas and talking points on why, how you can overcome the hesitancy, the buyers kind of paralyzed, waiting to see what's going to happen, why this is a good time for them to be out there. Because guess what? When rates come back down again, we already know that there's a huge demand for housing. It could heat back up quite quickly, couldn't it?
where I have seen a 3-2 buy one work really well, and this is in any market, not just this current market, but that's where in the negotiations between the buyer and the seller, sometimes they will negotiate an extra credit at closing that you weren't expecting. And I've seen it where sometimes it's substantial. I've had like, oh, $10,000, we've got this credit. And you're like, but I don't have any room to apply the credit.
Awesome.
A 3-2 buy one or 2-1 buy down or 1-1 buy down is a great place to apply that credit.
Or take it from a 1-0 to a 2-1, or take it from a 2-1 to a 3-2-1. That's an excellent point, Kevin.
Yeah, and it's what happens with it is it's not applied to the 3% cap of all the credits you can do. You can go over that, so you could actually, I'm assuming you can do a permanent buy down and a 3-2 buy down at the same time. Use the buyer's money to buy down on a permanent, and then
absolutely. You know what? I'm glad you mentioned that, because there's a lot of confusion on that. The interest rate on the note rate on a buy down, you can get yield spread premium, or you could have discount that the buyer's paying part of. The subsidy account is just going to subsidize the difference between the start rate and the note rate. It's a separate component from the cost or yield spread premium on the rate itself.
Yeah, so it's you can use both of the together. You can, if money suddenly is on the table, or they start negotiating, appraisal comes in low or something like that, and they start negotiating. There's lots of things you can use the 3-2 buy down to help make the deal still work.
Yeah, that's an excellent point. Yeah.
That's great. I think too that we need to remind people that attitude is everything right now. It really is. I mean, and it's very hard to get momentum going again once you have stopped. And so for people who are like, oh, I'm just going to take a break at, et cetera. Okay. But at some point you have to ramp back up, and that is harder than just keeping things going and having the momentum. And also the idea that you can't just sit in your office and hope that loans fall out of the sky anymore. It just doesn't work that way. You have to get out of your comfort zone and get back out there and be a salesperson again, which many LOs have stopped doing completely or never started if they just got in the business in the last few years. So again, just a reminder that we are salespeople at the end of the day, and that we have to go find the business. And there are a lot of reasons that's easier for us than other products, just because people want to buy a house. Most people want to own a house. So we just have to help them understand how they can do it. And you can't just sit around waiting for that to happen. You have to be proactive, not reactionary. So that's, what are you seeing, Terry, with your loan officers who
I know, yeah, I'm
how are
hearing,
they getting them?
for sure. I have been hearing anecdotally that often I've heard some funny stories, in fact, that realtors really don't understand the buy down. They think it's some voodoo product. And so there's an education opportunity. I can't think of a better strategy for right now, honestly.
Yeah,
especially
but no voodoo. You're saying
there's no voodoo. It's just demystifying it. I think using the buy down calculator and showing the subsidy, the subsidy amount, and here's what the payment does, here's the discount on it, here's what it cost the seller, and walking them through it. If you really break it down, I think when somebody says voodoo, it means I don't understand it, and I don't understand it.
Now, the really important thing is it's not available, to the best of my knowledge, on jumbo products. Only available.
That's correct. I don't know of any jumbos doing it. And what I think I've seen more, it sounds like more 7-1s. That seems to be more of a strategy on the jumbo side, but on the conforming, it's the buy downs, because we don't have the yield curve is such that the arms on the conforming doesn't really make sense, but this makes sense.
Yep.
And this is a great item to be educating realtors on, and helping them with their open house flyers, and prepping their sellers to be prepped to offer it, and then using those talking points, helping the realtors with those talking points on why it's a good time to buy. They really need those talking points we had on that early slide. Yeah, don't they? They don't realize all of this. I guarantee you, your realtors don't understand all this.
I think that is the critically important part, where you're educating people so that they are not listening to those headlines, which are so misleading and ridiculous in most cases. So focusing on the now and then. I've had very good conversations with realtors about this, and I to the point where they literally call me or text me later and go, okay, remind me what you said about that, because it's so powerful when they're talking to people and they don't know this stuff. So share it with them for sure. And Terry, can you put your contact information up on the screen, please?
Well, what we can do is we can attach it to the.
Can I put it in the chat?
Yes, 100%. And then also we will, we'll make sure that people know how to contact you. We'll make sure that if people ask, that we're able to provide that for them. So Terri.Buckman at PacRes Mortgage.
Oh, wait a minute. That didn't go to everybody. Or did it?
Oh, it did not.
But if
it went to the host and the panelists. So yeah, do it to everyone, please. And somebody said, is it not a potential problem leading a listing agent to advertise a temporary rate as the rate? And again, I don't think that the listing agent be advertising anything, right? Like necessarily this is a conversation for them to have with their sellers, so that this is an option that's being presented, right? And
you have to advertise it with your APR based on your note rate. All the advertising rules for the consumer
absolutely
are come into effect. We're
Wonderful.
having a conversation, real estate professional right now.
Yep.
But yeah, anything that you're putting in front of the consumer has to meet all the standard criteria.
Yes, absolutely.
I don't have an option to go out to everybody, unfortunately.
Okay. So what we'll do is we'll make sure that everyone who wants to reach you can reach you. We'll put it on the bathroom wall, at the post office. I mean, anywhere I can think of, we'll make sure that your information is scattered.
PackResWholesale.com. You'll find me there, all my contact information. PackRes.
Actually, you know what? You're not going to believe this. Kevin will fall over and die because he won't believe I'm able to do this. But I think I just sent it to everyone.
Yes, you did.
Oh, look at that. We
Look
do.
at that.
We have I have a drop down for that. I don't know why. Do you know? Okay. Anyway, that is regardless. Thank you. It is 30 minutes. We got it done. Thank you so much, Terri. You are the best. We just adore you and we appreciate all of your help.
Homeless and on crutches.
Yeah, she had surgery a few days ago. Somebody asked, is it PackRes Wholesale or PackRes Mortgage?
PackResWholesale.com.
Okay, great. All right, great. All
But
right.
we are a division of PackRes Mortgage, Pacific Mortgage. But PackResWholesale.com is our TPO channel.
All right. And your email is PackRes. What's the end?
PackResMortgage.com is the correct email address.
Okay, so that's
Yep.
why there's confusion. All right,
Yeah.
you guys got it. If you have any other questions, let us know. We're really happy that you joined us today. Thank you to everyone. And thank you again, Terri. We will see
Thank
you
you.
on Tuesday at 11 a.m. Pacific time and have a wonderful weekend. Mwah.
Bye. All.
Bye. Thank you.